Welcome to the Unicorn Millionaire Podcast, where we celebrate financial empowerment and pride all year long. I'm your host, Charlie Stover, a non-binary Latinx money coach who's traveled solo to over 34 countries while helping my first-gen LGBTQIA+ and BIPOC community invest in the stock market and themselves. From my journey as a formerly undocumented Mexican American to diving into the world of finance as a stockbroker, I've learned firsthand the importance of financial independence and how you can be anti-capitalist while investing. I said what I said. Through my podcast, I share empowering stories and drop gems on gems, from how to be a Roth IRA freak to buying your first home. I started this podcast because I didn't see anybody like me talking about how to take advantage of capitalism. Whether you're tuning in for financial wisdom, wellness tips, or just to hear about my travels, I keep it real, fabulous, and magical. Subscribe to the Unicorn Millionaire Podcast and leave me a 5-star review. We're here, we're queer, and we're building wealth juntos, juntas, y juntes. Let's get into it. Welcome everybody to my first class of the year. It is August, we're in Leo season, and I've just been honestly really busy running my business from Europe. I've been to like 10 countries so far this year, really working on the back end of my business. I totally revamped my unicornmillionaire.com blog, the SEO, to get more people to find my ass through the Google searches. I brought back from the dead my YouTube channel, and I've started to repurpose a bunch of my Unicorn Millionaire podcast episodes on there. I've crushed it just getting people on my Crush Debt Retire Early email list. It's grown to 437, and the quality of subscribers has grown, and I send an email a day, and my unsubscribe rate is like 13 times better. It's lower than average. It's a lot of back-end work that I'm proud of. I've been planting the seeds, although I did see a dip in revenue at the start of the year. I made 30K, and I've seen a dip in revenue at this time, but I just trust the process, and I'm planting the seeds for long-term growth, because that's what investing is all about, whether you're investing in your business, your health, or the stock market. And I'm excited to start teaching classes again. I'm a Virgo, but I'm like, it's August. We're stepping into that Leo energy, telling the people who the F we are, and teaching classes again. Because I was a teacher in my 20s. I did the Peace Corps, AmeriCorps, and I love teaching y'all about money. So let's get into it. Okay. Shout out to all the Leos out there. All right. So I've never taught a class like this, and I've never seen a class like this be taught, because there's a lot of shame around paying debt, and there's a lot of shame around selling stock. But I decided that my first class of the year was going to be about these two things, because it really matters now more than ever, especially right now at the time of this recording. It's August 2025. The stock market is at all-time highs. And I noticed some of y'all, and I asked you if you have questions about selling stock, there was a lot of shame and stigma associated with selling stock. A lot of y'all asked, will I be sacrificing my long-term growth if I sell stock right now? And I noticed, wow, yeah, there's a lot of like sadness and heavy dead energy around selling stock, when in reality, it is how I was able to start my business, fund my startup costs without depending on any rich white men venture capital funding. And I've allowed myself to sell stock poco a poco, little by little here and there, while also growing my net worth. So crushing your debt with stock, or whether some of you are debt free as well, but this matters now as well to you, because debt is growing faster than your investments. And just because you're debt free now doesn't mean you might not get into debt in the future. I personally did not get into debt ever until like 2 years ago when I was 32. And I had to manage my mindset and destigmatize debt so that I could use debt to leverage my business. So I have a whole podcast episode on that. It was one of my recent Unicorn Millionaire podcast episodes about how to leverage debt and credit card debt to retire early. So another reason why this class matters now is that you don't need to touch retirement to make big progress. I see a lot of people who work with me. They've taken out distributions from their 401k early because they think that they need to pay for things with either cash or their 401k, but that's not true. You can sell stock, and you should sell stock from a non-retirement account so that you don't get hit with penalties. And if you're always withdrawing from your 401k, you are delaying your retirement and you're sabotaging your retirement by pulling from these tax advantaged accounts that are designed for you to put money into them and have them grow and grow in a tax advantaged way and not touch them until you are in retirement, starting retirement, or 30 years into retirement. A lot of people think that retirement is when you're 59 and a half and that you'll die 5 years later and that everything should be turned to cash. But no, retirement can last 40, 50, 60 years, especially if you retire early. So you want to be investing well into retirement and have the knowledge of when to sell stock as you go. Another thing that's important for our community is building generational wealth. And what that means is growing stock and investing in the right accounts so you can pass off your assets to your loved ones, whether it's chosen family, brother, sister, biological family, kids. It is a flex to pass off investments instead of passing off cash. So even once you die, that money is still growing for your loved ones. And I know it sounds kind of morbid, but that really is what building generational wealth is all about, is having enough assets, having a surplus and excess so that when you die, your loved ones can benefit from the wealth that you built over decades because you knew how to start the process. Even if your parents didn't, you knew what to invest in and you knew how to pass off those assets. So yeah, this is heavy, intense stuff. But it needs to be talked about in our community. Last thing I mentioned already is that selling stock does not sabotage your wealth, it accelerates it. And I've seen way too many people hold on to stock while their debt grows bigger and faster in the stock market because they don't understand the time value of money. They don't know which stocks to pull from. So I'm here to dispel any myths that there are about selling stock. It's not a bad thing to sell stock. Like I say, I've sold thousands of dollars of stock and I've built my net worth, which you'll see. So recently I just hit $200,000 in net worth because I'm heavily invested in the stock market. A majority of this is in my retirement accounts. I have about 30K in a taxable brokerage account, which is the account that I'll talk more about, which is the account to sell stock from. And I have never made more than 45K at the 9 to 5. If anything, that's the most I've made at the 9 to 5 in 1 year. I spent my 20s doing the Peace Corps, making $300 a month, doing AmeriCorps, making 10K a year on food stamps, on Medicaid, having all the side hustles until my late 20s. I was like, this is not sustainable. I want 65-year-old me to be good. So I quit. I quit doing that. I quit overworking myself and being exploited because I thought that, oh, future me will get it together. Future me, I'll start making more money once I work hard enough. And in my late 20s, I realized, dang, I've been busting my ass and I'm still not making more money. I really need to change something. So then I started investing, and then with no finance background, I got a stockbroker job. And that's when I learned all about the stock market, which was that 45K job, which is the most I've ever made at the 9 to 5. And I realized that you don't need to make a lot of money. You just need to give it direction and start investing ASAP. Just like somebody in the chat said, I've opened a 529 account for my baby. That's the vibe, just like getting started and letting the compound interest compound itself. So that's why I do what I do. I'm very passionate about the fact that you don't have to make 6 figures to build a 6 figure retirement. You just have to give every dollar direction, whether that's in paying off debt and investing in the right accounts. So the first time that I sold stock was in 2021 when I was laying on the beach in Playa del Carmen. I was starting my free, thank God it was free, MBA program, because that MBA program did not help me build my business at all, because that MBA program was all about, oh, if you need to grow business, you need to get rich white men money, you need to ask for money through VC funding or grants and all of this stuff. And then I was like, nah, this is not the vibe. I don't want to depend on anybody for funding my business. I want to fund it through myself and with my community. So I talked to my first business coach, Kat Del Carmen, had a sales call with her, and I told her that I just wanted to grow my business more and make more of an impact. When I reflect on that phone call, I realized it wasn't about the money, it was about the impact. I made a couple hundred here and there with one-off calls before talking to her. But after hiring her, I realized, yeah, it's about me feeling more fulfilled about the money that I make. Because at the time I was day trading in grad school class, I'd like sit there and day trade, but I didn't feel good about that money. So um, this business coach told me her coaching was $3,000. And no one in my family had ever hired a coach or a business coach. I had never spent 3K on anything ever. That was the most money I'd ever like been asked to pay for something. But as my investor brain turned on, I was like, I want to do this for myself because I got a full ride to grad school. This grad school program could have cost 120K. Why don't I just treat myself to 3K of coaching and see what happens? And I'm so glad that I had that mindset instead of being afraid of investing and just staying stuck. If I hadn't done that, I would probably be working for some condescending boss and asking for PTO and hating my job because I never fit in at the 9 to 5. So I decided, yes, I will pay you 3K. I put it on my credit card, my Chase Sapphire Reserve credit card. I got hella points. And that night I sat on the beach and I sold $3,000 of Tesla stock that I bought. And I immediately used that cash. I got rid of that stock, thank God, because Ilanka's even cuckooer now than back then. But I was like, let me just get rid of this rich white man money and then use it to fund a Latina business owner to fund my trans Latinx owned business I'm starting up. That was a power move. And then I used that 3K to pay off my credit card in full. And then I made my investment. I was like, it'll be cool if I make back the 3K throughout my life. But then I showed up to the coaching calls, did the work, did my first Instagram lives, started putting more value in my captions, telling people who I was and how I could help them as a money coach, as a former stockbroker. And I made over $7,000 in sales in the next month. So I more than doubled my investment in a month through investing in myself, my power. I made more money than that money would have made sitting in the stock market. It would have taken years for that $3,000 in Tesla stock to turn to 7.5K. But when I sold that stock, I didn't sell everything. I still had about 20K in that brokerage account sitting there. The point wasn't to deplete that account, it was to chip away at it like an iceberg, but then leave a majority of it there because I could, because I didn't have any other debt at the time. I also didn't want to dip into my cash savings as a grad student. And I decided to complete my grad school program while living in Playa del Carmen because the cost of living was lower and I was a Mexican citizen. So it felt like coming back home in a way where rent was $300 or $400 by the beach instead of 2,000 for having my own place. So yeah, I share that story to share with you that selling stock helped me build wealth faster than just holding on to it and being afraid of it. Being able to release that stock and reinvest it in myself and let that money flow through me and to other areas and think about how I'm going to make this investment back, but not being tied to a specific timeline was really something that I helped all of my clients do. Learning how when to release and let go and trust yourself that it'll come back to you tenfold. And as of the time of this recording, my business just turned 5, and I've had multiple $0 months as a business owner. Income fluctuates, but I'm so glad that I have the personal finances set to withstand those $0 months, to withstand those low months, because you can make $0 in a month and 24K in the next month. And 5 years later, I've made $260,000 in sales just from myself without taking a dime of white men venture capital funding. And that was really because I understood and trusted myself to sell stock. There was nothing wrong with me. It was just an investment decision. And I trusted myself to move forward and make it back and do the work. And so that's something that I want you to take away from this class. There's nothing wrong with selling stock. You can always invest that money again. Logistically, A lot of y'all have been asking me, don't you pay a lot in taxes when you sell stock and you're afraid of paying taxes? And it's like, listen, y'all aren't afraid of getting a raise because you're afraid of paying more in taxes. All of us want a raise, all of us want more money, but when you do get a raise, you pay more in taxes, and there's nothing wrong with that. Just like when you do sell stock, you do pay in taxes, but it depends on your tax bracket. When I sold that 3K of Tesla stock, I took advantage of the fact that I was in grad school and was not making a lot of money, and I was in the lowest tax bracket. So in a taxable account, not a retirement account, I ended up not paying a dime in taxes on that 3K in sale because I understood that, okay, if I'm in a lower tax bracket, I'm not going to pay a lot or anything at this point. You can literally Google tax brackets. The fancy white man word is short and long-term capital gains tax brackets. And then you can see what percentage you're going to pay on taxes. It's not something that you outsource at the end to your accountant or TurboTax out of fear. You can foresee and budget for these things in advance just by looking at the tax rates. I still do this when I sell stock. It's really easy. Another way that I legally took advantage of not paying as much in taxes was that I sold stock that was a year old or more. You pay less in taxes no matter if you're making 300K or 30K. You look at which stocks you've held for a year or more and you pay less. So you are incentivized to hold on to stock for longer and rewarded with lower taxes when you sell stock that's been in your account for over a year. Day traders sitting in their mom's basements, they're paying a lot more in taxes because they're buying every day, buying, selling, buying, selling. That really churns up a lot of taxes. So in my opinion, it's not worth it. I've given up in day trading. As soon as I started making that 7K in my business sales and doing something a lot more fulfilling, I gave up on day trading because I became a lot pickier about the source of my money. The source of my money was something that was very important to me. I feel a lot more fulfilled and happy about receiving money from my coaching clients than I ever did day trading. And last but not least, like I said, I didn't touch my savings, but I still kept most of my money invested in that brokerage account. So that's a little bit about me. I want to share with you about how I helped one of my clients so that you see yourself in the stories of my clients that I've helped. So over 2 years ago now, I had a client who came to me who was $33,000 in credit card debt. This credit card was charging about 28% in interest. She was paying thousands a month in interest. And I told her to sell $33,000 in stock from her brokerage account. So when you work with me, we look at all your money all over the place. And I saw that she had a brokerage account with like $60,000 invested in it. And she didn't even understand. She didn't know that she could sell stock without penalty from that account. Yes, she'd have to pay taxes, but there was no penalty. This wasn't like taking money out of her 401k. So just with that, I was like, let's pull money from here and use that to crush the debt because that debt is growing way more consistently and way more aggressively at 28% than your stocks are at 10% if you're lucky. So she sold that stock, parted ways with it, and then crushed that credit card debt. And since then, she's been credit card debt free. And now she's using those credit card perks for airport lounges and to book hotels for her and her fiance on her honeymoon and all of these things. And is leveraging credit cards now instead of being afraid of them and feeling guilty for having the debt. And now she still has investments that are growing because, like I say, you don't need to sell everything. And her credit score grew by 100 points in 4 months. I feel like a lot of us are afraid of crushing our student loan debt because we've heard this myth that, oh, it's good to have credit, it's good to have debt, and your credit score is going to die once you crush your student loans. And that's not true. If you crush your student loans, yes, your credit score will dip because you're closing a line of credit that you've had open for months or years. But an easy way to overcome that is to open up other lines of credit through credit cards intentionally. I had another client who had 25K in student loans who she was having them sit there and grow to the lender's delight until she worked with me. And I was like, no, we got to crush that debt now. Let's open up these other credit cards get you free money with bonus intro offers, pay your credit cards off and be on top of them. And then her credit score also grew at the same time. If you are close to student loan payoff, but you're afraid because you're afraid your credit score will drop, opening up other credit cards is a great way to boost your credit score, not be afraid. A recurring theme within this is to not be afraid. It's okay. Make the moves when you're informed. So back to this client who had the 33K in credit card debt that she's paying thousands in interest for a month. I coached her through this because in my coaching, you get bi-weekly calls every 2 weeks. We meet, we make money moves together, and you'll get access to WhatsApp me with any questions. So she didn't even need to do this on a call. She WhatsApped me and she's like, okay, how do I pay off this debt? And I was like, call your investment firm. At the time, she was at Betterment, which is a crappy robo-advisor. I used to have my money at Betterment, which was like an algorithm that invests for you, but you actually pay a lot in fees, and they invest in funds that actually go down in value. So this was part of the breakup that I've helped a lot of clients break up with Betterment and just manage their investments themselves in an easy way. And so I was like, call Betterment and ask them about how much in taxes you're going to pay for the sale of the 33K. And she called them and ended up, because she'd had that stock for a year or more to her advantage, even though she was making six figures and was in a high tax bracket, she used that to her advantage of having had invested that money for over a year to pay less in taxes. So she ended up paying like less than $1,000 in taxes. It was wild. And that's not a bad thing. I've sold stock to pay for the taxes of the sale of a stock. You can budget for the taxes come tax time, right? So, and then in there, she sold the stock and then paid off the debt. And that is what immediately grew her credit score. And because I was helping her open up other credit cards, and she just felt very liberated. She'd used that money to help her family out. And I told her, okay, next time your family asks you for money, they're not coming to you to take out credit card debt because credit card interest is predatory. You need to chat with your family, establish boundaries about them maybe taking out a lower interest personal loan. They have no business coming to you to take out high interest credit card debt like that ever again. So that's another thing I help you with is boundaries and having informed strategic conversations with family instead of just taking out a high interest loan and lending them money because you're afraid of telling them, no, how about you do this instead? So once you have intentional conversations, you can save yourself money and your family money and be more intentional the next time they ask you for help. You got to empower yourself and empower your loved ones by understanding how all of this actually works. So she started seeing her credit cards as a way to enjoy life, build credit, get to the lounge. And after 2 years of coaching, because my coaching is 6 months at a time, but she loved how much I helped her grow her business, crush debt, move out of Betterment, invest money herself. And I saw her through the process of her grandma passing away, getting engaged, getting married, having a baby, so we could chat about the 529 accounts. She renewed with me 4 times. So after 2 years of coaching, her investments grew by $190,000 just in that time because I helped her invest in the right accounts and the right stocks so she could understand everything. And that's just the start. $190,000 in growth in 2 years, and that's going to grow to easily multi-millions, and she's going to retire early. So all of these moves have a cascading snowball effect in the best way. Feel free to put any questions in the chat. We have a small enough group as well. If you have any questions about anything, I'll also do an FAQ at the end after I talk about coaching. All right, so here's a question for you. You can feel free to put A or B in the chat. Which of these do you think is more expensive, the student loans or the credit card debt? Because it's important to learn how to prioritize them and not just throw money at them and hope it works out. So let's say you have 50K in student loans at 6% interest, and you're paying the same for each, $750 monthly payments. Okay. And then on the other end, you have the credit card debt. You have half that amount. You have 25K in credit card debt at 28% interest, and you do the same monthly payments, $750. So which one do you think is more expensive? And I phrase it like that because that's how you need to think about debt. All debt is you are paying to borrow money because you don't have the cash up front or you don't want to release the cash up front in the form of selling stock. So that's why you have to shift things around and think of debt as the cost of money, and the interest rate, whether it's 6% or 28%, is the price you are paying every single day to borrow that money. It's not annual. They want you to think it's APR, annual percentage, but you need to think about as a daily charge. Lenders don't want you to think about it like this because then you'll not pay them off as urgently if you think about it every day. That's how I think about debt. There's nothing wrong with it, but once you start thinking about it like a daily charge, it's going to shift things and make things more urgent for you to crush it. I just had a client that I helped who just was in a couple 100,000 of student loan debt. And it was like 20K that they borrowed. In the time it took from the student loans to release the funds, the 20K into their bank account and hit the 20K, there was like a 2 day gap. And I was like, see how much in interest you paid for that 2 day gap. And it was like $13. And they were like, oh my God, I can't believe that they've charged me $13 before that money even hit my account. And I'm like, yeah, this is urgent. It's expensive to avoid the debt. And now they're starting to make aggressive interest payments and all that. Okay, great. Yeah, y'all are on point. Okay, BBB. I guess I could have made this harder. But I hope the point lands that it's that interest rate, but you also have to look at the monthly payments and the amount in debt too. So it's not always going to be like, oh, credit card first. You might have 100 or 200K in student loans, even though the interest rate is lower, it might be more expensive to borrow that debt versus the seemingly expensive credit card. So yeah, with the student loans, if you made the minimum payments of 750, you'll pay almost $20,000 in interest, and it'll take you 82 months to pay it off, which is what the lenders want. They want you to take the longest to pay it off. That's why they have minimums that are set low, so that you delay and delay, and they make bank off of the delay because they have time on their sides. If you go with the credit card will charge almost 24K in interest and 66 months to pay it off. So if you leave with anything, I want you to leave this class with the understanding that your debt is very, very likely growing more consistently and more aggressive daily than your stocks are. Even if your stocks are more exciting and like sexier, that's the reality of it that lenders don't want you to know about. So another example, if you have 50K in student loan debt, 6% interest, and your monthly payments are 550, you are guaranteed to pay 3K a year alone in interest, and your balance barely moves if you do those minimums. Whereas, and I've seen this, I've seen people with similar amounts where they're sitting on this amount of student debt and then they have 20K in a brokerage account or even crypto, which I hate crypto. If I see this, I'm like, sell your crypto and crush your debt. If you have 20K in a brokerage account, on average, it's going to be earning, if you actually know what you're investing in and investing in the correct accounts, the correct funds, which I like everybody who I work with, I help them sell out of crappy stocks and into better stock. So once you have the correct stock, you're lucky to make 10%, and that's barely $2,000. But the stock market is volatile. I have 6 figures invested, and my money can go up and down by $5,000 in one day. So you could lose $5,000 hoping and waiting and wishing for your stocks to grow. Meanwhile, you are paying $3,000 guaranteed in interest on this amount. So it's not worth it, in my opinion, to wish and wait and hope that your stocks will grow. Starting to invest is not a good debt payoff plan. This is for people who already have stocks there, and you need to get rid of them to crush money, crush your debt. Starting to invest when you could just be paying off the debt is not a good strategy at all. I never recommend, oh yeah, open up an investment account and deal with the volatility so that maybe one day you might be able to crush your debt while that debt is growing daily. So the debt grows predictably and aggressively. The stock market does not outpace high interest or high principal debt over time. So that's something that I feel like everybody needs to be aware of and know more of. It's not worth the volatility. So the strategy for this, when you sell stock to crush debt, sell from a taxable brokerage account. That's what people erroneously call a Robinhood account, especially when during COVID, people were like, oh, my Robinhood account. I was like, that's not correct. Robinhood is it's like the bank. It's like the investment firm. They open the brokerage account in, but this is not a Robinhood account. It is a taxable individual brokerage account. And I have all my investment accounts at Schwab. I love Schwab. It is low cost. It's free. I don't pay anything to have my own investments there because I pick and choose what I invest in. And that's something that I help all my clients do. Open up your own accounts, open up your own investments. So you're not paying a rich white man to pick the same stuff you could have just done on your own anyway. So that is the strategy when I talk about selling stock is from this non-retirement account. However, I personally see my brokerage account as like a hybrid savings slash retirement account. I just don't have to wait until I'm 59 and a half. I don't have to deal with a 10% penalty and taxes like in my 401k in the brokerage account. The only catch is that you do pay taxes on it. And like I keep saying, there's nothing wrong with paying taxes, just like if you were to get a raise. You also want to target the high interest payment debt first, but you also want to look at, is it actually going to be more expensive to have like 100 or 200K in student loans? Because they want you to think, oh, the interest rate is just 4%. But if you have a six-figure balance, you could still be paying thousands in interest. So I'm on team, look at which one has the high interest payment, but you also want to look at what are the balances overall and you come up with a debt payoff strategy that works for you. So last, you want to use what you free up to rebuild your wealth even faster. Like I mentioned in my example, I've sold $3,000 of Tesla stock and I made back my investment. You don't need to be a business owner to make back your investment. If you have a 9-to-5 job or a paycheck, once you crush your debt, you can start putting more money in your 401k. I've never made more than 45K at the 9-to-5, but when I did have that job, I was putting 50% of my paycheck in that shit in my Roth 401k because I knew my ass was not going to last a long time at the 9-to-5. So I stacked that cash and made up for all the lost time. I didn't know I should have been doing this at like 29 because my parents did not open a 529 account for me, unfortunately. I didn't have investments growing, but I front loaded things and I made up for all the lost time. And then I quit my job after just a year. And when I quit that job, that 401k had 30K in it and it's grown already to 40K in just like 4 years. And it's going to keep growing and compounding and grow faster and faster. Your first 100K is the most challenging to build, but once you hit your first 100K invested, then that's when your money really starts growing itself, y'all. Like just in April with the stock market shit show with the tariffs and everything, everybody lost their mind and everybody was panicking and buying euros and posting on Facebook groups. What should I do with my money? I knew that it wasn't going to last forever, but my net worth dropped to 139K. And then I decided I'm just going to go to Europe for 3 months. I need to get out of here for my mental health. I'm going to run my business and I can make money from wherever. Even though I was scared to leave, I was like, should I leave right now because the stock market's crashing? And then I was like, staying in the US is not going to help your money grow at all. And then just a few months later, I'm back in North America, currently in Mexico, and my net worth hit 200K. Yes, okay, I did not invest another dime. I've invested $13,000 at the start of the year, but just because I didn't panic sell out of fear and I just kept my stock growing and I put more and more money in there at the start of the year, my net worth grew by like 65K without me touching it. So don't be afraid to sell stock to part ways with your money. You can always make that money back as long as you're strategic with it. You can always reinvest later when you have time on your side to grow that money. And like I've shared, it can take a couple months for your investments to grow by 5 figures. It's wild. I check my accounts every day just out of curiosity, not from a place of panic selling, but I like to look at my accounts every day just out of curiosity to see, to make my brain understand the fluctuations and get used to fluctuations. Because the more wealth you build, the more the fluctuations are going to be. Like I shared, at about 200K net worth, my stocks can go up by 5K in a day. And at the millionaire level, add another zero, your stocks can go up a Dow by $50,000 in a day. So that's why I'm all about training your brain to get used to fluctuations and not panicking and just staying the course when everybody else is losing their shit. That's when you lose money, when you panic sell because you don't understand what's going on. So if you want to work with me, I am taking one-on-one coaching clients. These are all the things that I'll help you do in my 6-month private money coaching program. And I put a link for you to book a call to chat with me in the chat, and you're going to get an email sent out here. So when you work with me, we meet every 2 weeks. You have access to WhatsApp me with any questions or celebrations you have in between calls. We log into your accounts together and we prioritize what to sell based off of how much debt you have. Or if you're debt free, we're going to be stacking your retirement accounts, your 401k, your IRA. I'm all about maximizing your retirement accounts and then treating the brokerage account like the side hoe. Y'all have no business investing first thing in the morning in your brokerage account if you have not yet maxed out your employer 401k or 403b and your IRA. So the goal when you pay off your debt is to max out the $30.5 thousand combined within your 401k and IRA first, and then you can invest extra money if you have it in that brokerage account. We also review the tax impacts and how long you've held stocks. I'll help walk you through which stock to sell and when, and help you understand the tax implications so you can actually budget for them instead of having the sticker shock and panicking and finding an accountant on April 13th to ask about how much in taxes you're going to owe. Millionaires build wealth strategically. They're not afraid of taxes and they plan for taxes. This mindset shift is why I have an accountant who I have a relationship with throughout the year, so that come tax time, I know what's up. And if I owe taxes, I will happily sell stock or pull from my cash without worrying about it. I'll help you crush your debt strategically without panic or shame. Like I've shared with this class, I'm not here to shame you or freak out because that doesn't help you at all. If anything, panicking, being ashamed and avoidant only helps lenders. And I'm not about that life. We'll also help you keep what needs to stay invested to grow long term, like I've shared with my own journey and my client's journey. We're not here to sell out of everything and deplete it if we can avoid it. And I'll also help you organize all your money in one clear dashboard. One of my favorite features that my clients tell me about is they love that I'm transparent as fuck with my investments. And I show you how I organize all my investments in one place so that every time I log in, I see my net worth and I see the fluctuations and I can link my outside savings account. I can link my outside credit card accounts. So I see how much money I have and how much I owe as I pay off my credit cards in full. And my clients love that. They love that for the first time in their lives, they can breathe easy and not wonder how much is in their old 401k. Like they log in and they see all their money in one place, especially if you're neurodivergent. That helps you just breathe easy with one less thing to worry about where all your money is. It hits different when you are informed and are able to log in and see it all in one place. So if you want to crush debt so you can even think about retirement, or if you've recently crushed your debt and you know that you need to make up for lost time so you can invest for retirement and build that 6-figure retirement, whether you make 6 figures or not, work with me. I'm taking clients for my 6-month money coaching. Coaching is $6,000 or 2 payments of $3,100. And as your money coach, I will know how much you've put into this and I'll help you pay it off and make your money back and make back your investments, because I have the unique opportunity as a money coach to be able to do that and be like, okay, remember this money you owe for coaching? Let's pull from here and make that back that investment. As soon as people pay for coaching, they're already making their investment back because they're getting hella credit card points, and I'll help them and I'll help you redeem them as well too. So I definitely encourage you to put this on a credit card so you get points instead of putting this on a debit card and getting nothing back. I'm all about getting paid for investing in yourself. You also get access to my full money coaching curriculum where I upload classes just like this that's exclusive for my clients. You get daily messaging support, calls over Zoom every 2 weeks where I'll walk you through opening accounts, looking, screen sharing so that we know where all your money is and making those moves together in real time. And if you have to-dos to do, I'll be like, call your 401k provider to see if you can max out your 401k or call your student loan people and see what the interest rate is if you're not able to see it. Because sometimes these dashboards are sketchy and they don't want you to know what the interest rate is so that you stay in avoidance and fill their pockets with money. So that's how I roll. I give you tailored investing guidance to your situation one-on-one. So you can finally breathe easy about all your areas about money and know that you will be able to retire early, especially in this economy with AI, with the layoffs, with everything getting more and more expensive. It's urgent and we don't have time to play around when it comes to financial freedom. All right, so I have time for FAQs if you have questions about coaching or anything I've shared. Let me check the chat to see any of the questions. Thank you for being here. I'll still be on for a couple more minutes. Okay. Paige says my only debt is the mortgage, and I already do the max contribution to my employer's retirement funds, thrift savings plans. So is it worthwhile to pay down the mortgage more or focus on investing and figuring out where and how? I feel like this is, I need to see all your numbers all in one place to see like your cost of living, how much in expenses you pay. Do you have dependents? Is it just you? Do you have roommates or are you paying this mortgage alone? I'm all about maxing out both retirement accounts, like your employer's thrift saving plan, and are you maxing out your IRA, your Roth IRA? Are you doing these with Roth funds as well too? Because that's a mistake I see way too many people make is that they think they're good by doing the pre-tax 401k or pre-tax TSP or pre-tax regular schmegular IRA. But I'm a Roth freak. I convert all my clients to being Roth freaks because in my opinion, it's better to do post-tax on everything. When I put half my paycheck into my 401k, it was 100% Roth. Because even my employer was doing the match with that free money, it was still pre-tax. So you might be doing the Roth 100% of your paycheck, but your employer is highly likely not going to want to pay taxes on it. So even then, you'll still have some pre-tax money in that account. So I think instead of wondering how much to put where, it's important for you to be aware of, are you doing Roth and doing the tax advantageness now and paying taxes now? Because a lot of people, especially in the Latinx community, they're all about like, oh, pre-tax just sounds better to avoid taxes. Because that's personally how my parents raised me, was just avoid taxes or pay as much upfront in taxes from your paycheck now so you don't have to deal about it and think you're making money through a tax refund when in reality, having a big tax refund is not a good thing. That just means that you gave the government interest-free cash advance. It's not a good thing to get a big tax refund. That means you overpaid them in advance and gave them money sooner than they needed to. I'm all about owing a little bit of money, a couple hundred or thousand, so that I can grow my money instead in my business or the stock market. So I think maximizing Roth in all areas and seeing if you're funding the multiple retirement accounts, not just the one, is important first before seeing if you want to pay down your mortgage. Because if you do the Roth, you pay more taxes up front and that lessens your paycheck by a little bit. But it's worth it because I don't know about y'all, but I'm not trying to worry about paying off the government's trillions of dollars in taxes when I'm of retirement age. They're going to raise tax brackets. Inflation's going to make eggs go from 15 bucks to 50 bucks. I don't want to worry about owing taxes when I could have just paid them decades earlier, AKA now. So I think being a Roth freak is really, really important now, and more people need to know about it. Liz says, do you ever withdraw or take loans from your retirement accounts? If so, in what scenarios? Never. No, I don't take loans from my retirement accounts. No, no. The point of this class is to learn how not to do that through a brokerage account, or if you need to just make more money, whether that means to work more hours, work more overtime, have a side hustle, sell some of your crap you don't need. I've sold hella I remember living in an apartment in DC where there was so much furniture, and I was like, we don't need this crap. And I started selling a bunch of stuff back when I was on food stamps and Medicaid, just increasing your cash flow to pay off debt. But I don't want to take loans from my retirement accounts ever. The point of the retirement accounts is to have to dump money in them and have them sit there and grow and grow and grow as long as humanly possible. I would rather personally take out credit card debt in a short amount of time, which is what I do, than to withdraw from my retirement. So I'll give this as an example. The first time I went into debt was when I realized that one of my business coaching programs, it was $10,000. So I went from paying 3K to 10K in business coaching because I realized that it was worth the investment and I could really turbocharge things and make my investments back, because business coaching, not the MBA, is what helped me really grow as a business owner. And so I opened up a business credit card to protect my personal credit score. Because when you open up a business credit card and establish your own LLC or corporation, you get basically a employer's ID number. It's like a social security number for your business. And that's essential to separate business from personal finances. So I opened the Chase Inc. business card. I got the bonus intro offer of spend like 3K and get 100,000 points or something. And I remember that my credit limit wasn't even high enough. I think my credit limit at the time was $6,000, but this coaching program was 10K. So I called Chase and I was like, can you increase my credit to 20K? I whipped the number out of my ass because that's what happens when you negotiate. You just want to shoot for more and see what happens. And so they gave me a $15,000 credit limit. And so I put the $10,000 on that business credit card. I did the work. I showed up. I was nervous AF because, again, I'd never spent that amount of money on anything. I could have bought a car with it, but I'd rather invest in myself and my business than buy a car, especially as somebody who travels. Like, a car is a depreciating asset that loses value over time, that is a money suck when it comes to insurance and bills and fixing stuff. Especially somebody who works remote, I do not need a car. I'd rather rent a car for a weekend than to have a car and worry about it rotting there and sitting there when I'm off in Europe for 3 months. So I did that. I did the work and I ended up making $43,000 back because I did the work in sales. And I could have paid the card off immediately, but once I grew an awareness of business finances and I realized that with my business credit card, the interest, because it was with my business expenses, the interest on it was a tax write-off, unlike with personal. So I started learning all these things about how business owners get a leg up. I mean, we should, because running a business is hard AF. You don't have a boss telling you what to do all the time and giving you like pizza parties for doing your job. Um, and that's when I started paying a couple hundred. Yeah, I ended up paying like $6,000 in interest because I didn't want to pay. I don't want to take the 10K from my business account and use it toward that business card like I would have. That's what I would have with personal, but with business, I was like, oh, it's okay if I pay a couple hundred because I don't want to resent my business. I don't want to wipe out my business bank account. I want to have enough to pay myself a paycheck so that I continue running my business, because that's something I see way too many business owners. They get depleted and burnt out and they mismanage their money and they quit everything and go back to the 9 to 5. So my ability to leverage debt and trust the process and just keep looking at my accounts and have awareness of the time value of money is how I'm still running my business despite multiple $0 months after 5 years and have hit 260K in sales, was because I know when to sell stock, when to take out debt, how to leverage it, and how to crush it and be okay with it if I have to take that money out. But I am glad that I did not withdraw from my 401k. It would not have made any sense for me personally to do that when there were other ways that I could get out cash and leverage my money. So if that makes sense. Let's see if there's other questions. Lots of variables for sure. I also max my Roth and have 2 toddlers and hefty daycare expense. Yeah. If you have dependents, I would look at just being on top of that. Like, do you have an emergency fund? If you were single alone, I'd be like, the emergency fund doesn't need to be so big, it can be 6 months. But if you have 2 toddlers, the emergency fund might need to be more, like 12 months. Yeah. So yeah, lots of different variables and expenses. So I'm not going to be like, yeah, crush your mortgage if you have all these things that we're uncovering that need tending to first in priority. So happy to chat about coaching if you want help prioritizing all of these things to make sure you're doing the right thing and investing in the right places and not paying too much of interest. Any advice on selling stock today different for RSUs? So I don't specialize in RSUs because they have their whole like tax situations and they vary by employer. So I would call your HR and ask them if you want to. Otherwise, just let the RSUs stack there. And it depends on the company too. When people come to me about RSUs or investing a lot of equity in one company, the first thing I do is I Google that shit. I Google that company and I see, is this company dependable? Has it gone up over the long term? Yes, it can go down a bit, but over the long term, over the past 10 years, has the stock gone up? If not, that would freak me out. And I would not want to put all my eggs in one basket in one company. That being said, I would just keep letting that money sit there, stack there. Again, I don't know your situation. I don't know if you need a 10K for a down payment and you're trying to sell that stock and worried about tax implications. But for RSUs, I would call your employer and ask them to explain it to you like you're five. Like, what are the tax implications? Do I need to hold on to the stock for a year or two or more? What if I leave? All the stuff that's dependent on your job. Okay. What is a good amount of money to start investing if you haven't? I'm thinking of opening an account with Schwab, but don't know how much I should start with. Again, Tanya, I don't know how much money you have. Do you have debt, student loan debt? Like, what's the cost of living in your area? What's your salary? What are your goals? All of those things matter. So I'm happy to chat with you about working together to come up with a plan about starting to invest. It's not a point blank answer. There's so many variables at play that go into me telling you what's a good amount to invest and where. But if you work with me, we'll prioritize investing. I think the where is more important than the amount. Are you maxing out your Roth IRA? Are you maxing out your Roth 401k? Are you putting as much of your paycheck as humanly possible if you're debt free into these Roth retirement accounts? And then focus on the amount. Yeah, I see way too many people investing in the wrong accounts first. And it's like, so you work with me, we're going to be investing in the right places and stacking and prioritizing and going from there. Okay, so yeah, thanks for your questions, for your engagement. Feel free to chat with me. I'm taking one-on-one money coaching clients so we can come up with a personalized plan for you so you can crush your debt, not feel guilty about selling your stock, and really stacking that cash so that you can retire early and not depend on an employer, a partner, a place, not depend on anyone or anything, and trust yourself to retire early so that you can build that generational wealth too. All right, y'all, this was amazing. Have an amazing day. Thank you so much for being here. So much for listening and dropping into today's episode. If you want to connect with me and work one-on-one on your money goals, I invite you to book a call to learn more about how I can help you with my money coaching program. I work with folks one-on-one long-term so that you can twerk your way to early retirement. I also want to invite you, if you haven't yet, to join my Unicorn Millionaire newsletter. I love dropping money gems through my newsletter right to your inbox, and I share my latest updates and invites to my free personal finance classes. What is better than that? I'm getting them from an MB who is queer and can't stop, won't stop talking about that Roth IRA freak life. So get that juicy goodness at the link in the show notes, and don't forget to visit my blog, unicornmillionaire.com, and come twerk along with me on Instagram at Traveler Charlie. That's Traveler Charlie with a Y because, you know, that's how they spell it down in Mexico. The information contained in the Unicorn Millionaire podcast is provided for general informational use only. Your purchase, download, and use of this material does not constitute a client relationship. The views expressed by the Unicorn Millionaire podcast hosts and guests are not intended to constitute accountant, legal, tax, certified financial planner, stock advisor, or other professional advice. Users of this podcast material should not act upon this information.
Users of this podcast material should do their own due diligence by independently verifying all information, products, and services mentioned with their own qualified professionals before making any decisions. We assume no responsibility for information contained in the Unicorn Millionaire podcast and disclaim all liability with respect to errors, inaccuracies, omissions, misleading, or defamatory statements. Users of this podcast accept and understand the terms of the disclaimer.